Good morning, everybody. It is Tuesday, February 4th, and we're going to start our prep here today for the ES. Are you all familiar with the term the pain trade? The market looking for the pain trade? We're going to dive into that today. We are below our line in the sand. Our risk window is open, and there's a pain trade in play. Let's see what the market has in store for us today. But first, just a quick reminder, derivatives trading is inherently risky, and past performance is not indicative of future returns. So if we look at where we came from, we gapped down yesterday. We've made a push up. We filled the gap in Globex, but we'll wait to see if we actually fill that in RTH. Our rotational price action today is going to be between 59.88 and 60.83, which would fill the gap if we get back up there and get us right to Friday's value area low. Our pivot is at 60.40, and that is right near yesterday's value area high. That is going to be a key point. And then you can see this is where our systematic death funds and algorithms are positioned today with a buy between 59.77 and 6,068. And our line in the sand is up here at 61.03. So as long as we're below that, we can add some shorts into our plan. Our students know how to do that. They know where to look. They know what setups to look for. We'll go in some of these videos over the next few days how to look at some of the levels, how to look for the trades at the levels. But if you want to get this all inclusive and understand all the setups to trade, we do have courses starting in about a month. So if we get below our rotational low today, that's going to be a big sign. We will look for yesterday's low at 59.49, and breaking that, we're going to look for a gap fill for the CPI day, as we have a seller coming in the market from our systematic side that would bring in $11 billion in selling here today. That would be substantial, and that would really trigger a lot of cascades, like throwing a stone in a pond. You'd start seeing those ripple effects coming out. On the upside, it becomes hard to get over that 60.69 and especially 60.98 back to our line in the sand, because our small buy turns into a $3 billion sell and an $11 billion sell. And so we're looking more for rotational price action today. Your big areas are going to be 46, 69.88, and or I'm sorry, 60.88 and 59.49. Those are going to be the three biggest areas to watch. Now, a pain trade comes from crowded positioning. So if everybody is positioned long, the pain trade is a downside move like we saw on August 5th. If everyone is short, then the pain trade is an upside move. And that's like what we saw at the end of October 2023 and in November of 2023 when the market rallied. There were also business cycles ending that were critical on October 31st. And beginning in November, that changed the market. There became billions that, or actually trillions, that could engage in the market. And that was the pain trade. And right now, we're in a situation where algorithmic and systematic based strategies are losing about $10 billion per week each. And fund managers are getting tossed around like retail traders during meme mania when GME and AMC were just going up and down like crazy. And we laid this out in several of our videos. People still have long positions, but they have cash on the sidelines. And last week during this March up, we saw our systematics buy about $25 billion this week, sold it all on Monday last week, started buying 15 billion back, sold that yesterday. And this is the giant washing machine. This is the pain trade right now. People have long positions, but there's cash on the sidelines. So we're not crowded to the long side. We're not crowded to the short side. They're buying insurance at the last minute for each catalyst. They're entering and exiting at the wrong times, just like a newbie trader would. And the pain trade right now is not directional, but volatile, wide swings. We shake people out. We get the systematics and the fund managers to buy 20% of their total cash outlay, only to shake them out within a single day. That's the pain trade going on right now. And this is what market makers are doing. And it's all just part of the game. So we have some other things that we look at intraday. We look at some of the internals in the market. We get into exact positioning on other instruments that you can use for correlations in trading and timing your trades. And this is all just part of the game. And if you can understand the levers they're pulling, when they're pulling them, and why, you can really build yourself a very strong edge, because the market will not move unless there are flows coming in. So because we are more day traders or very short-term swing traders, Anything less than a month is less macro driven and more flows driven. And so today, as long as we're below our line in the sand, we will consider some shorts, most likely at the 60.88 and 60.41 area. We do have some other levels that we look at that are proprietary and just for our students. If you'd like access to those, check out our courses. We're starting those on March 8th, and we will have some more videos coming for you all this week. Have a great day trading and stay safe. Control your risk out there.